We need to talk about regional banks being sold short by Wall Street, looking to capitalize on stress and fear. We should talk about a rolling recession, a white collar recession. And we should also talk about where the jobs are. We got a very hot jobs number on Friday. So let's get into it. This is your daily financial news for May 5th or Cinco de Mayo. I hope you had a wonderful day. Yes, folks, and Sunny just jumped on my lap. So we'll let him hang out here. So, first, let's talk about what's going on with regional banks. Obviously, they have been under some great stress recently. It appears that Wall Street is trying to call Jerome Powell's bluff. What do I mean by that? Well, what I think I mean by that is Wall Street has learned that when regional bank stocks go down, that it will cause negative headlines, and negative headlines cause us to withdraw deposits and move deposits from bank A to bank B. Thus, if they could lean on a stock, i.e., sell it short, create a rather large and dramatic share drop, that it could cause a bank run. The bank run then calls for FDIC to take over, and bingo, bango, they get paid off in their shorts. I now believe that there is some understanding in Washington that this activity is occurring, and it would not shock me if they talk about or maybe even institute a ban on short selling for regional banks or the ETFs or something of that nature. This is, again, what I think Wall Street is trying to do is obviously make a profit in some of the most disgusting ways possible by creating fear, fear that pays off, obviously, and hopefully it stops. Again, I think there is value in short sales, but when you are playing a game, trying to create bigger fear or contagion, not a big fan of that. So we'll see what happens. I don't know if we hear something on Monday or Tuesday about limits on short sales for regional banks or maybe ETFs. So it will be interesting. Let's talk about rolling recessions. I do think that there is a good chance that what we will experience over the next 18 months is a rolling recession where housing took it on the chin, now autos, then manufacturing, while services stay strong. I think there's more and more understanding that what we might be going through is very much a white collar recession, something else we've talked about the last 9 months or so. Very much tech and finance oriented, which I still believe is the lion's share of the layoffs. Again, let's talk about the banking crisis, regional banks, whatever you want to call it, lending crisis. I think we're going to get more color on that next week, or this week, I should say. I just think deposit flight is going to cause banks to lend less. And I really think the pain in commercial is going to be exacerbated actually by banks that won't refi. So not only are we going to have less transactions, meaning purchases, I don't think people realize that the commercial lending business is a lot of refinancing. And I think you're going to see a lot of banks say, no, thank you, which is going to be cause a lot of fear. And then something else that Warren Buffett said over the weekend was that he expects a lot more bodies to float to the surface. What does he mean by that? Obviously, he means there's a lot of zombie companies that were being funded, a lot of zombie investors being funded by debt. And as interest rates stay higher for longer, more of that will come to fruition. So, yeah, tighter credit going to slow the economy. Absolutely. There's a lot of things kind of going on in that area. I don't know if you saw this, but there is a proposal by AOC and Matt Getz about banning politicians or lawmakers from trading stocks. My hope is it also includes options. I haven't read it. But let me just say this. I don't often agree with the politicians or lawmakers, but I will give AOC and Matt Gaetz credit. I agree with this proposal wholeheartedly. In fact, if you're a longtime subscriber to the channel, you know that I've pushed for this. I think it is distasteful and disgusting that lawmakers can front run stocks, use inside information, and profit from it. I think it is wrong and it should be outlawed. Let's talk about the jobs numbers, where the jobs are at. Again, if you don't remember, the jobs number came in hot, like 296 on a 133 expected, something like that. We will talk about the revisions in a minute, but let's get into where the jobs were last month. Healthcare at over 64,000, professional and business services over 43,000, leisure and hospitality over 31,000, and construction 15,000. Now, not only did we get a big beat on the April jobs number, we also got significant revisions for the last 2 months. And when you read a jobs report, the headlines will often be the latest month. But as somebody that's in the data realizes that the past revisions have been pretty significant, it really kind of cancels each other out. I will say that revisions are not uncommon. Big revisions are not uncommon. However, having multiple months of big revisions is uncommon. Hopefully that made sense. I don't know what that means. I don't know what to think of it, but it is worth watching because, again, a big beat and then a revision kind of nets it all out. So it's definitely something I'm watching, and we'll watch in the main numbers when those come out in early June. I don't know if you read the report from Lance Lambert. He put out something on Fortune. He is our Thursday guest. He talked about institutional buyers backing off 90%. So what does that mean? Frankly, that means iBuyers. That means Wall Street, hedge funds, private equity aren't buying as rates went up. I would argue iBuyers makes total sense. It's a stupid business model that didn't work in the best times, and it's not going to work in the times that are different. Wall Street is licking their wounds. They're losing money in commercial. They want to control capital. A risk-free rate of return of 5% is a lot different than 1%. There are private equity hedge funds and others who are having capital calls. So it's not shocking that these institutional buyers are backing off. I don't think it's a trend. I do think some of them will be back, not iBuyers. Let's be clear. I think that's a business model that will become iSellers and then they will disappear. But yeah, that's where I'm at. And then lastly, I have 2 announcements. One, the legendary Ladies of Investing event is now recorded and uploaded. If you paid for the course, I had took the time of the last 3 days to add it to your Teachable profile. So go to your Teachable account. It is there. If you would like to buy the event, which was amazing and beyond expectation, you can. It's $47, the same price. You can find it on Teachable or one of the links below. And then finally, we are going to do an event on the 21st of May with the Lumberjack Landlord, Dion Talk, Millennial Mike, and I. It will be 3 hours where you can come on and ask all of us questions. It is going to be limited to 100 people. It is going to be no PowerPoint, 100% driven by you. So a lot of you asked for this. So we're going to schedule it 2 weeks from today. So buy your ticket soon. I do expect this one to sell out. So again, 4 amazing one rental at a time contributors on one show, answering any and all of your questions. So come one, come all. We will see you there. Thank you very much. I will now record my Saturday financial news. Thank you so much.